Hello and welcome to Your Stocks in the Mumbai News Studio. I'm Ekta Batra. Well, it's turning out to be a day where we're just about holding on to our gains for the Nifty. So it seems as though we're probably going to slip into the red anytime soon now. And separately, we have the mid-cap index, which is underperforming, so down around 0.4% currently for the mid-cap index. But there's a lot of action in specific stocks today, and we probably do have a lot of queries as well, considering that we have quite an active stock-specific market on our hands. We have with us Astha Jain, research analyst at Securities, Ruchit Jain, who is with 5paisa.com to answer all of your fundamental and technical questions respectively. Welcome to the show. Well, Ruchit, I'm going to start with you and ask you about what you are seeing in terms of the trend for the markets. It's completely flattened out for the Nifty now, with the mid-caps underperforming. Largely, you would say a quiet consolidatory kind of day?
Yes, hi, very good afternoon, Ekta. Very good afternoon, Astha. Well, Ekta, if you look at last 10-15 days, our markets have seen a slow and gradual up move, but there have not been any kind of corrections in the market during the second half of the August. So the momentum readings on the lower time frame charts are a bit overbought. So we might see some more consolidation before we move up the next leg of high up again. But this entire consolidation or small corrections, if come, they would just be some time-wise correction within an uptrend, because the data is quite positive. If you look at the rollovers recently, then FIs have about 70% positions on the long side in the index futures. Even if you look at the price volume action in many of the heavyweights, there are no signs of kind of trend reversal happening. Banking is not participating, but some of the other sectors such as IT is there, FMCG is looking good, even oil and gas to some extent is looking positive. So I think some of the other sector would keep supporting the markets higher, and any corrections would just be time-wise corrections or consolidations of some days, and again we should see a resumption of uptrend. So strong support base is now seen around a 25,000 mark, where a good amount of open interest is also placed in the put option. So downside seems to be limited. It remains a buy and dip market. Keep a stock-specific approach over here, and any dips towards the 25,100, 25,000 range comes, take it as a buying opportunity.
Okay, all right. Well, we do have a couple of queries now. We have Dheeraj, who writes to us from Hyderabad, holds 200 shares of Geo Financial Services, which he's bought at around 326. He wants to know what to do, whether he should hold or sell this particular counter. So Geo Financial Services, that stock is up around 2%. He's just about sitting on a profit at this point in time. Astha, do you think that this would probably be a longer term hold?
Yes. Hi, good afternoon to both of you. Yes, we think it is a longer term hold, and that's why we are recommending, although our price targets are very small. I think what we are giving as a price target is at around 355 to 360 odd levels to our clients as well. So we are positive on this counter. Now, talking about this counter, what we believe that what will be working in the favor of the company is that the launch of the new products, especially in the secured lending business. So definitely that will help the company going forward in posting strong financial numbers, along with the backing of a strong parent and the extensive customer base. Although the numbers in the Q1 of FY25 were the muted set of numbers, but we believe going forward with the launch of new products, the company will be going to post strong numbers, hence giving a hold with a price target of 355 to 360 at the current level.
Okay, all right. And what about you on the technicals? This stock has done well this year. How would you approach it, Geo Financial?
We have already seen a corrective phase since the later half of April, where the previous all-time high was around 394. From there, the stock has corrected towards 310, 320 kind of range. But here, the stock seems to be finding a good support around the 310 mark, where the June month lows are there and even August month lows are there. So price-wise downside seems to be limited from here on. So I would recommend to continue to hold on. In case if he wants to keep a stop loss, then 300 should be a good stop loss to initially keep it. And on the high side, can expect targets towards 370, 375 very soon.
Okay, 370, 375 very soon. We have Gopika now, who writes to us from Mumbai. She holds 1350 shares of Hindustan Unilever, which is bought at around 1245. Wants to know whether to hold or sell at current levels. So she's sitting on a very good profit when it comes to HUL. Portfolio stock, it's a frontline blue chip. From that context, Ruchit, how would you approach a stock such as this on the technicals? And do you think that it's a hold at these levels?
So one good thing is about the position is the buy price. Levels that she has mentioned, I think it was somewhere in 2017. Since then, we have seen a good amount of trended phase till 2021, and since 2021, it's been 3 years where the stock has been in the consolidation phase. So clearly, the time-wise corrective phase is also, I think, has been done in the stock. And the kind of breakout, the previous highs has been taken out recently in the stock. I think the broader uptrend has resumed after this consolidation phase. Technically, if I put retracements on the recent correction, then it gives me target somewhere around 3150 to 3200 range. So still at current levels, since it's a long-term holding positions, I would recommend to continue to hold on.
Okay, so you'd recommend to currently hold HUL from these levels as well. What about you, Astha, on Hindustan Unilever?
So we are also recommending hold, although our price targets are at around 2950 to 2965 odd levels. Talking about this counter, results were okay, but now what we are seeing that there is an improvement in the rural demand led by the innovations, which we have seen especially in their soaps, which Lux and Lifebuoy are. So they have led some sort of innovations there. Improvement in the rural demand is there, and management is also confident of maintaining the EBITDA margin. In fact, management has also stated in their commentary that they will be taking the pricing actions in H2 of FY25, depending upon the input cost. So if such sort of price actions will be taken by the management, then they can definitely that will help the company in posting strong margins going ahead. So we are positive on the counter, recommending a hold, as well as buying on dip strategy can also be implied. Our initial price target is at around 2965 to 2970 odd levels.
Okay, all right. Well, we do have R. Madhav now, who writes to us from Chennai, holds 20 shares of Mazgon Docs, which is bought at 2,260. Wants to know what to do, whether to hold or to sell this particular counter. Sitting on a very good profit on this one. 39,000 odd is what he's made on this particular counter with only 20 shares. So that's the kind of gains that one is seeing within this space. Astha, over to you on this.
So what I recommend is to wait for making a new entry into this counter. In fact, we are recommending to book some sort of profits also if someone is into the profit. The reason being the overvaluation, because what we believe that stock is presently overvalued at this point of time. Although we have seen the robust financial performance by this company in Q1 of FY25, but what we believe that due to the overvaluation of the stock, the company or the stock might show some sort of degrowth in the stock prices. So it is a right time to book partial profit. This is what we are recommending to our clients as well. So my idea here is to wait before making any new entry into this counter, because we are believing that this counter may fall further.
Okay, you expect this counter to probably fall further. What about you? What would your recommendation be on this, Ruchit?
So the stock has done well historically, but in last 2 months, we have already seen some correction from a highs. So it made a high of over 5,800. And now it's quoting around 4,200. Now the 100-day exponential moving average support for Mazgon is around 3,970. So roughly 3,950 to 4,000 range. So I think that should act as a good support for now. And we could see some bounce back again in the stock from that support. So for now, I would recommend to continue to hold on. But yes, since it's sitting in good profits, I would recommend to keep him a strict stop losses around 3,900 levels. Because of 3,950 breaks, then I think this 100-day breaking of 100 DMA will not be much good for that. So till this is intact, I think you can continue to hold on. But strict stop loss should be placed below 3,900 levels.
Okay, a strict stop loss below 3,900 levels. That's the word coming in on Mazgon Docs shipyards. That stock just about lower by around 0.8% today. But we have Meena now, who writes to us from Kolkata, holds 300 shares of Hanasa Consumer, which is bought at around 432. Again, sitting on a good profit there. Wants to know what to do with this particular counter. Well, let's start with the technicals on this one. What is the data telling you in terms of all what you've gathered till now, Ruchit, on Hanasa?
So limited data on the charts, but whatever price action have recently happened, I think the volumes have been increasing whenever the stock is going up. And whenever there are in between corrections, we have not seen any kind of high volume based selling now. So that is a bit positive sign. So the stock has now formed a good short-term support base around 450, 460 kind of range. So I think till that is intact, it has potential to rally towards 560 to 570. So hold on your existing positions with a stop loss below 450.
Okay, and what about you, Astha, on Hanasa?
So we are also recommending hold, and our price target is 560 to 600 odd levels. Talking about this counter, what we believe that management has continued to hold its strategy, house of brands, which will be working in favor of the company. Right now also it is working in the favor of company, and some of the brands like the Derma CEO or the Aqualogic, they are really working well for the company, and now the company has rolled out them in their premium beauty outlets also, previously that were into the modern trade only. So I think now the company has a thrust on expanding its TAM, that is total addressable market, as well as increasing customer base. So I think the company will definitely going to hold its financial performance in a strong way going ahead. Recommending a hold. Initial price target can be set at around 560 to 600 odd levels.
Okay, 500 to 650 odd levels. That stock has given returns of around 18 odd % in the past 6 months odd. On that note, we need to take a short break with the news that we have a lot of stocks which are buzzing. So do watch out for stocks such as Geo Financial. That stock is up around 1.7%. Suven Pharma was seeing good traction. Fortis Healthcare, after buying back its stake, a private equity stake in its diagnostic arm, is seeing good traction. So that stock is up around 1.6%. And Biocon too got 2 approvals from the US FDA, is seeing a gain of around 1%. We'll take a short break and more queries on the other side. Stay tuned. Welcome back. You're still tuned into Your Stocks. We have with us Astha as well as Ruchit to answer all of your stock queries. Well, we have a buzzing market on our hands as well. Just watch out for stocks such as Dr. Reddy's, which is now down 2.5 odd %. It did get a blow from the Chinese regulator for one of their particular drugs. So the stock is under pressure on the back of that particular piece of news. We do have Hindalco, Tata Motors, a couple of these stocks which are also under pressure. But as of now, Dr. Reddy's is the top loser. But we do have another query now. We have Karthik, who writes to us from Chandigarh. He holds 500 shares of Bank of Baroda, which he's bought at around 274 odd. So he's sitting on a loss on that one. He wants to know what to do, whether he should book his losses at this level or not. Astha, do you think that that should be the case, book losses at these levels?
I don't think so. I believe that this stock can show strong performance going ahead, because even the management has guided 12 to 14% of loan growth. So what we believe that going ahead, maybe we can see the strong financial performance or a decent financial performance. So I think wait for some more time before exiting from this counter. Right now, we are recommending hold. Initial price target which we are giving is around 265 to 270 odd levels.
Okay, 265 to 270 odd levels is what you're predicting on that particular counter. But what about you, Ruchit, in terms of the technicals? What would your levels be, and what is your stop loss as well?
Yes, so I have similar view that these are not the levels to book losses in Bank of Baroda. Although PSU banks have seen a good amount of consolidation in last 3 or 4 months, but the price-wise downside seems to be very limited from here on. The stock has formed a good support base around that 240 mark. So you can keep a stop loss below 240 and wait for a pullback move. And on the high side, the initial resistance would coming around 274, 275, I think roughly around the buy price itself. So wait for a pullback move towards those levels and then take a review again over there.
Okay, all right. We now have a query on Vodafone Idea. We have Sujit, who writes to us from Bhopal, holds 400 shares of Vodafone Idea, which is bought at 13.85. So he wants to know the levels that he can look for the next 3 odd years on this counter. Well, 3 years is a long horizon for a stock like this. So Astha, let's go to you on that one, on the fundamentals. If someone does come to you with a query that, you know, they'd like to hold Vodafone for 3 years, what would you recommend? Is it tough to take that call?
Yes, because in fact, the management has guided strong capex plans, etc. But we really need to see how they will turn out to be. So my idea here is only for the short term. Who has a short-term view, they can really partially book profit in this counter. But here, since the horizon is long-term, we really need to see, because the capex plan is high for the management. And definitely what they are saying is that they are looking to add growth in their 4G subscriber base also, because they have really fixed some of the problems, or like the decongestion of network, such sort of problems they have already fixed. So we really need to see how all these things turn out to be. So it's a really uncertain counter. But for long term, it's a hold. But for the short term, we would recommend to book some sort of profit.
Okay, short term, you would recommend booking some profit. Ruchit, what about you?
So I think there's a broad range in the stock which is going on. Around 13 is the support and resistance is around 18 to 19 range. So possibly this consolidation would continue within this range in the near term. So not expecting any trended phase in the short term. But yes, this is the range bound stock where one can expect the consolidation to continue.
Okay, so you expect the consolidation to continue. We have Vinay, who writes to us from Bangalore, holds 200 shares of Nika, which is bought at around 397 odd, and wants to know what to do, whether to what would be the prospects of this particular investment. So he's sitting on a loss when it comes to Nika at this point, quite a sharp loss on that one. So what is your recommendation, Ruchit? Let's start with the technicals.
Technical sector looks positive. The stock has went through a long consolidation and a corrective phase post listing, but off late the volumes have started increasing, from lower levels. So I think the downside seems to be very limited from here on. It has a good support in the range of 195 to 185. So I would suggest then, in case if you get any kind of dips around 195 odd levels, then it could be good levels to buy more and bring your average price down from your original buy price. So I think hold on to existing positions and look to add more positions if you get any dips towards 195.
Okay, dips towards 195. What about you, Astha, on Nika in terms of the fundamentals?
We are recommending hold with a price target of 245 to 250 at the current level. Talking about this counter, their core beauty business is really strengthened because the company has improved product mix. Going ahead also, we believe that company's focus is on profitability, that too by reducing the marketing spends, so that will help the company. I think in the long term, whatever strategies the management are stating in their commentary, that is creating some sort of optimism, and on that basis only we are recommending hold. The initial price target of around 245 to 50 odd levels.
Okay, all right. We now have a query coming in on Divi's Labs. Puneet writes to us from Ghaziabad, holds around 4,000, holds around 25 shares of Divi's, which he's bought at around 4,450. He's sitting on a profit there. Wants to know the target for 1 to 2 months. So technically, what would you recommend, Ruchit?
So from 1 to 2 months perspective, I think can expect levels towards 5,300 to 5,350. These were the previous highs in October 2021 where all-time highs were made. So some selling pressure would come in over there when it again reaches those levels. So hold on existing positions around 5,300 can take a review to book profits in case if it's a trading position.
Okay, all right. Well, it's not a technical call, but in any case, what would your fundamental call be, Astha, on Divi's?
What we have seen is that custom synthesis business is showing strong performance, although generic business performance is still muted. But we are expecting custom synthesis business to continue to show strong growth. And that is why we are positive on this counter, recommending a hold. Initial price target which we are giving is at around 52.85 to 52.90 level. I mean, somewhere near to 5,300 odd levels. So we are recommending hold on this counter.
Okay, you're recommending a hold. Now we have Mehek, who writes to us from Mumbai. Is asking if she can buy shares of Zydus Life at current levels. Well, there's negative news which is coming on Zydus Life today because they've got a warning letter for one of their injectable plants. But nonetheless, the stock is still only down around 1.3%. What is your recommendation, Astha, on this?
So Zydus Life, we are not recommending right now to make an entry into this counter. Wait for some more time and then make an entry into this counter. Meanwhile, if someone has the stock in their portfolio, they can continue hold it for the price target of around 1,200, but that too in the long term. Now, talking about the fundamentals seems to be okay about this counter because what we have seen that they have gained market share in one of their key products. So that will help the company going ahead. I think Zydus Life is well poised to show strong financial performance going ahead also on the basis of some launches as well. So we are positive on this counter, but due to this negative news, I think the stock may fall further. So wait for some more time before making a fresh entry into this counter, but a hold can be recommended on this counter.
Okay, a hold can be recommended on this particular counter. That's on Zydus Life. Quickly, Ruchit, your call on it.
So in last 1.5 years, in this uptrend, you have seen that on corrections, the 40 weeks exponential moving average technically has been acting as a good support. And that moving average support is right now placed around 1,990 range. So if anyone is looking for fresh entry in this stock, then wait for some dip towards that 1,990 mark. If it comes there, then the risk reward ratio would again become favorable to create counter longs over there.
Okay, all right, Ruchit, as well as Astha. On that note, we're going to wrap up on the show. But do remember to email us your questions. We'll address them with our experts. Closing the up next.